Hey, Skift listeners, hear about the latest trends in the travel industry with the Brand USA Talks Travel podcast. Right now, listen to special live from IPW interviews featuring U.S. Travel's Jeff Freeman.
DMOs are at the heartbeat of U.S. travel.
Liz Bittner from Travel South.
A lot of key gateway markets are back.
LA Tourism's Adam Burke.
We all win when we all partner together.
Plus, Brand USA's Stacey Melman and Jackie Ennis with international travel trends and Chris Thompson's farewell finale. I'm Mark Lapidus. Join us for Brand USA Talks Travel on your favorite podcast platform.
Brand USA Talks Travel.
Hey folks, this is Rafat Ali, CEO and founder of Skift. I'm here with Tom Lowry, who's the editor-in-chief of Skift, and Seth Borko, who is our research analyst at Skift Research. So the reason we wanted to do this conversation between the three of us is a very timely conversation. Lots and lots of layoffs are happening in the tech sector. This morning, Facebook announced what is probably one of the largest layoffs in tech sector ever. One of the largest. It's not the largest, but this morning is November 9th, 2022, as we're sitting here. And Twitter just laid off a large part of its staff last week. Other companies as well, not just on the consumer tech sector, but also enterprise tech sector. More to come. Tech is such an outsized part of U.S. economy, world economy, increasingly. And so what does it mean for the travel sector is what we're trying to put some arms around. Some first level effects, some second order downstream effects in the travel industry to potentially come. And so I don't know if we have all the answers, but a big goal of Skift is to actually try and ask the right questions, or at least ask questions as early as possible so that people start thinking about it. And that's what we'll quickly discuss. So Seth, let's start with you. These layoffs that are happening, you are always the numbers guy, always very much focused on big picture macro. So give a sense of what these layoffs mean to the economy and then potentially to the travel industry.
Yeah, well, I think it's like we bifurcate it. There's kind of two different points, which is what the layoffs say about the broader economy and what these tech leaders see about the economy going forward. And then there's the more specific about what impact it will have on travel. I think I would start by saying that I ran some numbers and I think we can throw them up on the screen. But what happened was the tech industry was just affected totally different than the travel industry during the pandemic. They saw massive growth at some of these companies. People had nothing to do but spend all day on Facebook or Twitter, and they hired dramatically. And so, if you look at these tech companies that just announced layoffs, their headcount is on average up by 60% relative to 2019. But if you look at the travel sector, headcounts are down 25, 30% still from 2019 levels. So I think that, do we say, is there such weakness? The question is sort of, look, how much of this is specific to these companies that expanded during the pandemic? And how much of it is these leaders seeing the economy slowing down in their numbers? Because one is kind of insular and the other is a much bigger problem for the travel industry.
And so in terms of the next question is, could this spread through the larger economy and then to travel?
Yeah, so that's the chart I was talking about. So you can see the companies I use. I just pulled this really quickly, and you can see that, online travel, hotels, they kind of made their cuts already of very similar sizes to what tech is going through. But to go back kind of to talk about your question, could this come to travel next? I think what we saw was these are very cyclical sectors, right? There was a moment in 2021 when it seemed like tech was on fire and it was never going to slow down, and the CEOs hired accordingly. Right now, travel is having that moment. We sometimes call it like a never-ending summer. Like the demand just keeps coming and coming and coming. Right. And so I think that the risk is travel companies making the same mistake of assuming that the good times never end and that they overhire during this expansion cycle. And then, 6, 8, 12 months down the line, I think, if we don't learn those lessons, it could happen again.
Let's also just put it in the context that the travel industry is still facing enormous labor shortages, right? So we've been reading lately about something called labor hoarding, which is that, even if they were thinking about layoffs, they're not. They're holding on to those workers because they fear that they won't be able to fill those positions. In fact, there's an outplacement firm called Challenger and Gray that tracks layoffs. And January through October this year, layoffs were down 16% compared to all the years that Challenger and Gray has tracked this stuff. So that's since 1993. So, I mean, I think that puts it into a little bit of perspective. Second point is that, there's been some H-1B visa issues that were a labor, pipeline for these tech companies. So, and there's enormous delays and bottlenecking there. So, I think there's probably a lot of people contemplating, should I lay somebody off, uh, given the fact that I can't get labor through that visa program anymore.
So, in terms of uh, sort of the effects of these tech layoffs, particularly in these large consumer tech companies, um, in the travel industry. Here's how sort of I'm thinking about it, which is if you tourism board had a contact at Facebook that you're working with, there's a good chance that person is gone. 50% chance that person is gone. They're like such large layoffs. Twitter, equally so. If you were working with Twitter, almost guarantee the chances are the person is gone. So now you have to figure out tourism board, hotel company, any other types of industry organization, airlines, etc., that were working with these platform type companies, who the contact is. Each of these companies, including the more enterprise tech companies like Salesforce went through a round of layoffs, probably more to come, Stripe and others. Each of them had, over the years, created travel hospitality specific teams. Small, but they were there. Are they still there? That's a question or are they consolidated into, I don't know, larger retail type teams? So one, that is like a very direct effect potentially that is likely happening already for the travel industry.
Well, totally. I mean, these players are so integrated into the travel industry. I mean, Google had some stuff, and it's like that. Google is the number one company that we talk about sometimes in the travel. Sometimes it feels like we're not talking about travel. We're talking about Google. Meta is a huge source of performance advertising, and I mean, we've done numbers that, pre-pandemic, like $14 billion of travel industry ad spending on Google alone, now closer to 10, but quickly recovering. And so I think it depends on the platform. Certainly, probably within Google, the focus on travel is still strong, I would imagine.
Right.
On a company like Twitter, it's probably a lot less. But I think also, and again, it comes down to this question of, how much of it was these companies over hiring and
Right.
saying, look, we can still provide the same advertising. So much of this advertising is self-serve advertising. We can still provide the same self-serve advertising to travel clients with less people, versus how much of it is actually going to become an operational bottleneck when, if a hotel company wants to run an ad and no one picks up the phone, that's an issue, right? So there's still so much to see how it's going to play out logistically.
And then
There's all,
go ahead, Tom.
I'm sorry, I just wanted to point out that, then there's also these huge companies that drive the backbone of travel, Sabre, Travelport, Amadeus, Oracle Hospitality, that we cover on a regular basis. And we haven't seen any signs of layoffs at those companies, at least not yet. So I think it's important to keep that in mind as well.
Yeah, and who knows if it comes. I mean, every tech company potentially could be affected if the large economy starts slowing down. Not just this, for now, is very much overhire shedding off and overvalued company shedding off, versus a larger systemic thing.
I think that's sort of the point here, is that, Lyft doing layoffs. Lyft isn't profitable. That's a huge deal. And so we saw a whole bunch of travel SPAC or SPAC-like deals that aren't profitable. Sonder comes to mind. Are they going to start doing layoffs next? I think that's probably the closer target, which is the companies that are are the most cyclical, the most exposed to changes in the environment, as well as those that are the least profitable, are by far the most at risk. Does a company like Marriott, which cut its headcount, is still not fully recovered and is struggling to train and hire people, are they going to do layoffs? I think they're much lower on the riskiness level, so to speak, in terms of how the impacts are felt downstream throughout the travel sector. But I think the broader question is the economy is slowing and we're seeing signs of it. And this is ultimately the companies that have overhired, overexpanded, made the least amount of money are feeling that slowdown first.
Yeah.
Hey, Skift listeners, hear about the latest trends in the travel industry with the Brand USA Talks Travel podcast. Right now, listen to special live from IPW interviews featuring U.S. Travel's Jeff Freeman.
DMOs are at the heartbeat of U.S. travel.
Liz Bittner from Travel South.
A lot of key gateway markets are back.
LA Tourism's Adam Burke.
We all win when we all partner together.
Plus, Brand USA's Stacey Melman and Jackie Ennis with international travel trends and Chris Thompson's farewell finale. I'm Mark Lapidus. Join us for Brand USA Talks Travel on your favorite podcast platform.
Brand USA Talks Travel.
Let's go into some of the other effects. So obviously, tech companies drive a lot of business travel. Certainly that we already have seen. We've done some stories as well, Tom, on the editorial side on
Sure.
Some companies pulling back on sending they're not, obviously business travel hasn't fully recovered the way leisure travel has,
Right.
but even that is being rethought on the tech side. Google, I remember a story about like Google saying they're going to start sending less people to conferences or
Right.
like something to that effect. So certainly that's a negative for the travel industry in terms of the business travel recovery that was happening is going to be delayed or slowed a bit, and maybe potentially more to come if the economy slows down even more. So certainly that's happening. The tech companies that were sponsors of tech, that were buying tickets to attend conferences or sponsor of travel industry conferences, including ours, again, will slow down on some of that. So certainly that's happening. The meeting professionals or corporate travel managers within these tech companies, good chance they're at least some of their teams are part of the layoffs. So meaning less resources to spend money in the meetings industry or in the corporate travel world from these tech companies. So these are definitely first order effects of these layoffs at these companies that I think will happen.
Let me put a question to Seth and put him on the spot. I mean, how do you think these layoffs and the scale of these layoffs will impact venture capital and startups and raising funds? Do you think those kinds of firms are spooked a little bit by what they're reading in these headlines?
Yeah, let me respond to Rafit's point about meetings, which I thought was a good one first, because I think Rafit is you're spot on there in that those big corporate events, right? Like Salesforce has its Dreamforce, that's a huge conference. It feels really uncouth to throw a big party and conference after you just laid off a huge amount of your staff. So I think that you're totally right in terms of immediate first order effects. The corporate travel and meeting space probably feels it. To answer your question, Tom, though, about venture capital, I think it makes things tougher for sure. I think it goes back to what I was saying about the companies that are most vulnerable are going to be those that are not profitable, and the startup model has been, spend a bunch of money, get market share, and then you figure out the profitability later. That doesn't work in a recession. That doesn't work if we're seeing layoffs. It doesn't work if your corporate clients are cutting back on spend and if there's less meetings, less corporate travel. And so I think it must be instilling some skittishness. Plus, you also have to add in the downstream effects of the actual investors themselves. If you were a limited partner who normally invests in venture capital and you just put a lot of money into Twitter, you don't have that much money left to speculate. You're probably down. You don't have a lot of money to speculate on a small startup. That money gets tied up. So I think it does start to lead to a belt tightening.
Adding on to that, I posted yesterday, or was it the day before, on LinkedIn, and the question was for travel startups and investor folks, which is very much what Tom you're asking, which is macro environment slowing down, travel still booming, what does it mean for travel startups? So I got 42 comments as I'm sitting here talking to you on that LinkedIn post in a day, and hundreds of likes, or likes as in people wanting to read it, not like as in this is good, which is that obviously if there's chilling of raising of money from VCs, travel startups will be equally affected potentially, all things being equal, than same as other startups. So certainly that will happen. Travel was never the biggest category of investment anyway. It's especially travel tech. It's a very specialized sector. There are multiple players. A lot of general VCs don't understand it. So a lot of people are saying it was hard to begin with anyway. Even in the boom times, it's hard for travel startups to raise money. Beyond anybody who's more on the transaction, like consumer transaction side. And so it was hard then, it will continue to be hard. Valuations are coming down for startups as well. In general, this has happened all across, you mentioned this as well. So obviously that will happen as well. So I think it's a fascinating time for us Skift covering all of this. Obviously it's not a fascinating time for companies that are going through this, but for us from a stories perspective. Let me bring a couple of other points. Some of the other tech innovation on the edges that people were experimenting with, whether Meta investing in VR, or crypto stuff that was happening. The bubble on both of those is gone, which means the experimentation that was needed to make any of this a reality forever to become a reality has been delayed, which also means in the travel industry, if there were applications in the VR, AR space or in the crypto space, unlikely they will happen anytime soon. So again, that's another second order effect of the layoffs and general chilling in the tech sector. What also remains to be, what is also, I should say, is that the best time to start a tech company and be successful is in the downturn. So we'll potentially see world-changing companies come out of this downturn that's going to come, just because that's just how every cycle in tech has always gone, which is companies, including company in our sector, Airbnb, got started in the financial crisis, coming out of the financial crisis. Certainly that's there.
I always remind people that Airbnb was founded in 2008, 2009 to address a very specific recessionary problem, which was, saving money and finding places to travel in a recession. And it's obviously that's no longer the use case. Well, it is a use case, but it's no longer the primary use case. But I think that, you're spot on that with the speculative edge off, it can kind of be a positive for the survivors, because you're really forced to double down and find a use case that 100% works, 100% makes money today. And that can grow into something powerful, like it did with Airbnb.
Yeah. And then, anytime VC is down, potentially PE action picks up. So, there's potentially private equity deals to come in the tech space that then affect, because a lot of these companies that are losing money are potentially be picked up for pennies on the dollar by the PE firms if there's something to salvage there. And so that means, travel, it will have an effect on the travel industry as well.
Yes. I mean, anyone with dry powder, with cash to spend, is probably excited. I mean, the thing that to keep in mind is that we've been talking about consolidation in travel for a couple of years now. It is, by the way, really is starting to happen. It certainly is in many sectors. But I think that's the answer to that. Yeah, I mean, things, there's opportunity. There's always opportunity in chaos, right? You just got to have the wherewithal to go for it. Okay.
Anything else to add, Tom?
No, just that there's never a slow day for news.
Never a slow day for news. Yeah. So let's wrap it up. Essentially, this is what we wanted to do, which is put some brackets around these real-time news that's coming out in terms of these layoffs that are happening. Certainly, the big ones have been announced in the last 2 weeks, and unfortunately, more to come. The good news, though, I'm on and a positive news. It will unlock what's the number that Facebook has announced this morning?
11,000 Meta. It's from Meta, the parent company. It's 11,000.
It is 11,000. For some reason, I read 16 somewhere, but I was probably wrong on that. But 11,000 and thousands more from Twitter, etc. That means so much more talent unlocked in the world. Sure, short-term pain will continue to be short-term pain for the people that are affected directly. from this, so we should minimize that. But tons more companies will be started, some of them in travel, some of them with lots of implications in travel. So, and travel sector, which is going through a labor crisis, continues to surely can't pay the salaries tech was paying, but has jobs for people to fill, especially with tech skills. Digital transformation of travel industry continues to happen, and so there are jobs in the travel industry. So I'm sure travel recruiters are digging into some of these companies and trying to see if they can hire. So I would end at that positive note, which is that a lot more talent has been unlocked potentially for the travel industry as well. So with that, let's end it here. Thank you, Tom. Thank you, Seth. And hope to see you all soon. And please check out skift.com for our daily news, and Skift Research, which is research.skift.com for all the research that Skift puts out.
Yeah.
Thank
you so much. Yeah. Wonderful.
This has been the Skift podcast. Thank you for listening.